Happy evening, one and all present here. On behalf of SARC of ICI, we welcome you all to today's study circle meet on recent decisions in income tax and GST. As you all know, that the new committee has been taken over on 22nd of February. So during the new committee, which we have taken, and I am heading as a chairperson of SARC. So since the taken over till this time, and we have done a number of programs. That is on 16th March we have done one day seminar on bank audit, and 18th and 20th 3 days workshops in bank audit series. Which was yesterday got over. And really we are very happy to see the programs which were well appreciated and received by members. And in fact, March 8 we have done women's conference that also received well. And when it comes to future programs, 22nd, that is tomorrow, we will be having one day seminar on bank branch audit, that too especially challenges, practical issues and audit automation. And 23rd, we will be having one day seminar on AQMM and presentations to be, precautions to be taken for the year-end closures. Apart from that, in April, in the month of April, for the benefit of the members who will be doing the bank audit, for them we will be having the online question and answer sessions. I request the members to make use of the facility, and whomever will be having any doubts and if they want any clarifications, they can attend the sessions and they can get their queries get clarified. So with this, when we come to today's session, the recent decisions in income tax and GST, it is much more required at this point of time, because the decisions, because on the basis of the decisions only we will be planning our income tax and GST, which is our core area of practice. So to share the expertise knowledge in this subject, we have with us an eminent speaker, seasoned speaker, CAT Banusekar sir. So I request CA Banusekar sir to please come onto the dais and occupy the chair. And I request Muralidharan sir to come forward and present a bouquet. Banusekar sir doesn't need any introduction, because he's a seasoned speaker and everyone knows about him, and usually we call Banusekar sir as a first batsman for any of our sessions, because we feel that people also will be looking up to Banusekar sir's session, but still, because this is the first session of our tenure, we would like to introduce him briefly. He is a qualified chartered accountant and enrolled as an advocate in the Bar Council of Tamil Nadu, associated member of Institute of Cost Accountants of India, and he has contributed articles on direct taxes and international taxation to several tax journals, including Consolidated Commercial Digest, which is published by publishers of Income Tax Reports, Taxman, Tax Referencer and Income Tax Review. He is also practicing as an advocate before the courts and various appellate forums. He has argued in a number of cases in various benches of Income Tax Settlement Commission and Interim Board of Settlement, and he has authored few books. To name a few, that is in Handbook on Assessment Procedures under Income Tax Act 1961 and Search Assessment under Income Tax Act. He has served as a visited faculty at the Institute of Chartered Accountants of India and Institute of Company Secretaries of India and the Loyola College Institute of Business Administration on direct taxes. He has delivered lectures and presented papers on direct taxes and international taxation at seminars, meetings, workshops, conferences arranged by ICAI, SARC of ICAI, as well as other regions of ICAI, apart from those organized by other professional and public bodies, including several branches of various regions of the Institute of Chartered Accountants of India. He has actively participated as a trustee in brain trust sessions organized by branches of ICAI, and he has participated in training programs for Commissioner of Income Tax conducted by the Regional Training Institute of Income Tax Department and also the Central Training Institute, that is National Academy of for Direct Taxes. He is formerly chairman of Direct Tax Committee of Hindustan Chamber of Commerce and formerly a columnist in Hindu, the Business Line, in the Personal Finance Speech featured on Sundays, authoring the column Tax Talk. He has served as a member of SARC of ICA during the period 2001 to 2004. He has served as chairman of the Fiscal Law Committee of the Southern India Regional Council of India of ICI, and he has served as a special invitee in the Direct Tax Committee of ICI and in the Continuing Professional Education Committee of ICI. He has served as a cooperative member of Direct Tax and International Tax Committee of SARC of ICI. With this very brief introduction, now I hand over the session to our renowned speaker, CA Banusekar sir.
In fact, when I was called and told that I should do some recent case laws on direct taxes, I got a scare day before yesterday because I accepted to do this, and the day before yesterday when I saw the topic, it read recent decisions on income tax and GST. Well, I would have made a mockery of myself, and then I realized that there was another speaker who was going to bear the burden of GST. Well, so that eased off a little pressure on my side, and I was just looking at some of the recent decisions. I've always had this practice of getting up in the morning and starting to read something or the other after I finish my regular morning routine. Maybe an hour or two is what I spend every morning. And I also have this practice of forwarding important case laws to the entire team. So I picked up cases only from there, say about 10 or 12 of them. And when I started preparing the case laws, I realized normally when we look for case laws, we generally find, okay, this may not be important, this may not be of interest to many, etc., etc. But this time around, when I started looking for case laws which I could probably deliberate on today, I found at least 3 times the number that I could probably speak in the time that is allotted to me. That is the extent of case laws that have been generated in the recent past. So I'm sure you are going to go back unhappy that I have not covered some case laws which you would have liked me to cover. Well, I have tried to look at case laws which can be of general importance, and I have also tried to look at certain case laws which, if understood in a different perspective, could probably give a lot more clarity to various aspects that we are grappling with. The first of the case laws I will start with is not an income tax case at all. It is a case which is called the High Court Bar Association Ahmedabad versus the state of Uttar Pradesh. And this decision was rendered under Article 142 of the Constitution of India. In fact, that was rendered in the background of a criminal law. But it can be of great importance to us in income tax. Now, broadly what happened was, sometime earlier, there was a 3-judge decision, 3-judge bench decision of the Supreme Court, where the Supreme Court, in the context of criminal law, had held that if there is any interim order of stay, then that interim order of stay will stand vacated on the expiry of 6 months automatically. What happens is that if you obtain a stay from a court, any high court, as per the Supreme Court, in exercise of its powers under Article 142, which permits it to issue any directions, it passed an order saying that on expiry of 6 months, the stay will stand vacated. Now, large questions started arising as a result of it, And the matter ultimately reached a 5-judge bench, a constitution bench of the Supreme Court, which sat to review the decision of the Supreme Court in the 3-judge bench case. And they framed for themselves mainly two questions. The two questions that they framed for themselves was whether the Supreme Court, in exercise of its powers under Article 142, can direct that stays will stand automatically vacated, and two, whether they can direct that any case which is pending and where a stay has been granted should automatically be heard on a day-to-day basis. I will not go much into the depth of this because this is basically a decision which was rendered under the Constitution of India. But what the Supreme Court ultimately did after a great deal of analysis and after going through its own decision in Pepsi Foods, where the Income Tax Act had been amended, granting the power to the tribunal to stay only for a 6-month period, after which the stay is automatically vacated. The Supreme Court said that such vacating of a stay is not possible, and until the tribunal so wishes, a stay can be in operation. Until it is ultimately the stay is vacated, the stay will be in operation. Now, after looking at all this, the Supreme Court ultimately held that there can be no case for vacation of a stay automatically. That doesn't concern us so much. But the larger part was whether at all the Supreme Court, in exercise of its powers under 142, can issue such a general direction. Now, first thing they looked into was into Articles 226 and 227 of the Constitution of India and said high courts are courts, independent constitutional courts, and exercise complete superintendence over all lower courts in their territory. A. And B, they said when a stay is granted by the High Court, the stay is granted because an immediate final order is not possible, and such stay or interim orders are passed to protect the interests of the parties concerned. And they said that this interim order or stay, whichever you have obtained from a High Court, is an order which is passed after hearing the matter prima facie and after considering the issues relating to natural justice. And they said that this is a substantive right which is vested in every litigant. And they ultimately went on to hold that by virtue of exercise under Article 142, the Supreme Court cannot pass general orders which will affect parties who are not litigants before that court. That means, if I and you are fighting a case, the Article 142 direction cannot bind anybody else other than the two of us, because only we are litigants before that court. Right? Because if that is done, then a substantive right, which is a right by way of an interim order or any stay order, will stand vacated without the concerned parties being heard. So if in my bail petition, if in the bail petition of A, the court passes a general order saying everybody's bail will be vacated, those hundreds of thousands of people have not been heard. They said that is a substantive right that they have got that can never stand vacated without giving an opportunity of being heard. Now, how is this relevant to me as a tax practitioner? All of us here are probably aware of the decision of the Supreme Court in Ashish Agarwal. Ashish Agarwal was a decision rendered by a division bench of the Supreme Court comprising of 2 judges. Now, if I must briefly recollect what happened before Ashish Agarwal, the whole confusion arose because in the Finance Act of 2020, there were amendments made in relation to the proceedings of reassessment, where a completely new procedure came into place. Earlier, what used to happen is you will get a 148 notice asking you to respond by filing a return within the stipulated time, that will be normally 30 days. Now what happened by virtue of the amendment was that they incorporated the findings of the Supreme Court in GK and drive shafts and said that there will first be a notice under 148AB given to the assessee. The assessee must respond to that notice. After taking into consideration the response of the assessee, the assessing officer will pass an order under 148AD, and if in the 148AD he holds that reassessment proceedings should be proceeded with, he will also issue a 148. So a 148 was not simply issued. 148AB, your response, 148AD with a 148. That's how the provisions are, with effect from 1/4/2020. Now what happened, you will also remember, that was the COVID period. So the TOLA came into place where the amendments gave extended times for different aspects to be done. Now as a result of that extension during the COVID period, there were some timelines that got extended, and what the revenue did was, within the extended time, but beyond the time contemplated, that is beyond 1/4/2021, they continued to issue notices under the old law. Now this confusion in Ashish Agarwal is only for a 3-month period between 1/4/21 and 36/21. All officers issue notice during this period by following the old procedure. Now the question was whether the old procedure must be followed or the new procedure must be followed. Of course, there is little doubt that by virtue of the TOLA, the extended period is available. Now, though the extended period is available, assessee's claim was that the extended period is available, but you must comply with the new law or the new procedure. The revenue's contention was that we need to follow the old procedure. Matter travelled across several high courts. Most of the high courts, including the Madras High Court, held that such notices issued by complying with the old procedures are bad in law. Because the officers need to have complied with the new procedure. Matter reached Supreme Court. Supreme Court said the department has issued 90,000 such notices, of which 9,000 people have filed writ petitions before various high courts. But the Supreme Court was concerned only with 2 petitions which arose before it. Ashish Kumar Agarwal and I think Anand Kumar Agarwal, if I am not mistaken. I guess they must be brothers. Excepting these 2 petitions, no other petitions were listed before the Supreme Court. But the division bench of the Supreme Court said, since this involves large public interest, we are invoking our powers under 142 and directing that in all cases the notice issued under 148 will be deemed to be a notice under 148AB. Within 15 days from this day, the officer must give you the reasons. Then you can file your objections within this stipulated time. And once those objections are filed, the officer will pass a fresh 148AD order and issue a 148 notice. This was some kind of a compromise formula which the Supreme Court directed should be followed in all cases. Please note that this was a decision of the division bench of the Supreme Court. Now we have a constitution bench of the Supreme Court which would say that you cannot affect parties who are not litigants before this court. So who are the litigants before that court? One, Ashish Kumar Agarwal and probably his brother. Now what did the Supreme Court do? The Supreme Court made an order which will affect 90,000 different people. Now after this decision, I would think that it will affect only those 2 persons and nobody else, because the rest of them have got substantive rights which they have got through various court orders, or which are already vested in them by virtue of the provisions of the statute itself. Therefore, it is my view that the decision in Ashish Agarwal will now have to be read down as a result of this decision of the Constitution bench, and possibly one could argue that the Ashish Agarwal decision will not apply to any persons who are not litigants before the court, the Supreme Court, at that point in time. That is why I said this could be a little crucial for income tax matters. Now, having spoken about reopening, I will probably deal with a couple of more issues on reopening before I proceed further.
The only doubt is the purpose of granting a stay is a temporary one, correct? So extending it further will not make.
Now, let us look at it this way. You got a stay. You were heard, a speaking order was passed. How can it get vacated without a speaking order?
That is correct.
Sir, the court delays the process, sir. So you should go to jail, or I should go to jail? Sir, I am granted bail today. In 6 months, the court should complete the proceeding. If it does not, we will go back and sit in jail. Does any matter get completed in this country in 6 months? Sir, 25 years old, the then Prime Minister is supposed to have paid a bribe to MPs, MLAs, MPs for the purpose of buying them over. The bench of the Supreme Court said, no, you cannot do anything to them. A larger bench sits saying, no, you can do it. Now they have to launch cases on all those MPs. The person who gave is dead and gone, he is a Bharat Ratna also now. The Prime Minister, Narasimha Rao, is a Bharat Ratna. The persons who took must, 25 years back, means even assuming they were 45, then today will be 70, 75. By the time proceedings start and are over, you can imagine. So if that is the time frame we are looking at, it is impossible. I understand it is a temporary measure, but how many cases get over within a stipulated 6-month period? It is impossible. And if there is an automatic vacation of stay, you imagine the burden on the courts again. Because every 6 months the court has to sit down and hear the stay or the bail over again. And pass one more speaking order. The vacation should be by a speaking order once there is a speaking order granting me bail. Sir, if I take a bail, for example, when does a bail when is the bail granted? Only two circumstances when the bail will not be granted, except in case of very grievous offences. Risk of flight, tampering of evidence. Now, in 6-month period, will any of these change? Then why should the bail stand vacated? So that is the logic with which the larger bench now says that that is a substantive right. It is not merely a procedure. A bail granted or a stay granted is not a procedure. It is a substantive right. I have got that right. You can't deny it to me without even hearing me. That's all they say. They don't say it should never be vacated. In fact, if you read that decision carefully, they say what are the circumstances in which you can vacate also. They lay down tests for that as well. Anyway, now coming back to reopening, a couple of other decisions on reopening which I thought we could quickly cover. One is a SLP dismissal by the Supreme Court in a case called SABH Infrastructure. Now in SABH Infrastructure, the Delhi High Court had laid down a 4-point guideline for the revenue on all matters relating to reopening. Now these 4-point guidelines were the subject matter of SLP before the Supreme Court. The Supreme Court rejected the SLP, which effectively makes the Delhi High Court decision a good law. At least SLP by itself does not create a binding precedent. It does not have the force of the order of the Supreme Court. But still you have to understand that the Delhi High Court gets a little more credence with the dismissal of this SLP. And which I will understand every lower authority, whether he is under the superintendence of the Delhi High Court or otherwise, would be bound to follow. Now incidentally, this was a decision rendered under the old provisions relating to reopening, but can still be useful under the new provisions. Now quickly to see what were the tests that were laid down. Test number 1, it said every officer will have to get an approval, and there is a standard pro forma for granting this approval. The Delhi High Court said that this standard form must be sent along with the notice for reopening to assessees. I don't have to ask for it. 1. 2, it said every reason that is there should be spelled out in the reasons recorded. Now, what is now substituted is with the notice under 148A. And more importantly, it said that if there is a reference to any other document, letter, report, etc., that should form part of the reasons communicated. Now, under the new law, if you were to look at the provisions of 148 itself, it broadly provides that these must be performing part of the communication to the assessee along with the 148AB notice that is sent to the assessee. But rightly or wrongly, I find that no case we get this as part of the reasons which are sent to me under 148AB. And it also said that when you are disposing of the objections, that is not a mechanical ritual, but you are supposed to be passing a quasi-judicial order, and it should be as speaking as possible and self-explanatory. In fact, I have seen a number of officers say, as he has raised all these objections, but all this will be dealt with when I finalize the order. That is not the way you dispose of an objection. Every objection that I raise, you have to say why, in your opinion as an officer, that objection is not valid. Right? Only this morning, for example, I was seeing a simple case of very small matter. According to the officer, some 1.5 crores has escaped assessment. I am giving a broad example. Now the SC is able to explain that actually the amount escaping assessment is not 1.5 crore, but is only 40 lakh. Right? And very clearly, there is no problem in this explanation. Now the officer says, broadly it appears okay, but I will deal with this in assessment. Now the law is that if you are reopening beyond 3 years from end of assessment year, the minimum amount escaping should be 50 lakhs or more. Now I am at 40 lakhs. The reopening itself is bad. You are supposed to drop the proceeding. Now you say, I will deal with this later. When? Why should I go through this harassment? Now these decisions of this decision of the High Court can be very useful for us even under the new law, because of the way in which the guidelines have been placed. In fact, under the new law, there are decisions which say that relevant material for reopening should accompany the 148AB notice. There are decisions of the Andhra Pradesh High Court, the Bombay High Court and the Calcutta High Court of the subject. But unfortunately, officers invariably refuse. In fact, 3 days back, 4-5 days back, I was shocked to see one show cause notice. It is not on reopening. It is a show cause notice. The assessee's turnover from manufactured goods is 950 crores. And from traded good is 50 crores, totaling roughly about 1,000 crores. The show cause notice says, as per the records of the CBIC, your turnover is 15,700 crore. Explain the difference. I go to the site and see it is still showing 1,000 crore. I don't know where he got that number from. And he says show cause, why 14,700 crore should not be added. I added 10 years turnover, I am not getting that number. Because he has the power to reopen for 10 years. I tried 10 years. I still couldn't reach that 15,700 crore. That is my dream. The company's dream is to reach 15,000 crore. But that is the officer has reached it in one show cause notice. Now while responding, we told him, you give us at least what data you have, we will reconcile. Again one more notice. My information is that you have so much. Explain. So at some point we got exasperated and we wrote, For 1,000 crores, I have shown a profit of 100 crore. Now you want to make it 14,800 crore. 14,800 crore over 15,700 crore is 95%. Who will make 95% net profit? So even if you want to do something, take some 5-10% of that. So that it will make some sense. At least I can continue to fight. Otherwise, I have to lock the door and give the key to him only, and say, you do the business. If that much profit is coming, government can close down and run that one company. For 15,700 crore, if you can make 14,800 crore profit, then government can run more profitably by starting the same company, some 10 more companies, and be done. Well, that is how funny notices are. Be that as it may, I don't see even a single material or order or a notice where they have followed it up with proper, backup in terms of the material that they have. This show cause notice was an example. If they want me to reconcile, they have to give me what numbers they have. I am giving them with every possibility. Interestingly, the only business I do is export. I don't even have 1 rupee of domestic sale in this case. So everything is recorded and passes through customs and goes. So what unaccounted sale I will do? And I don't have a manufacturing capacity to do 15,000 crore turnover. That is my problem. My capacity itself is not even that much. Anyway, now the next issue, since we are speaking of reopening, is the sanction. Now, insofar as a sanction is concerned, there have been a number of cases where the issue with regard to sanction has been questioned. And I am specifically dealing with a case where an SLP has been dismissed arising from the decision of the Bombay High Court in a case called Pinky Rajesh Modi. The Bombay High Court held that if a sanction is to be granted by a prescribed authority, it has to be granted only by that prescribed authority. No higher authority or lower authority can grant sanction. So if, for example, for reopening a particular case, you need a sanction of a commissioner, it is not open to a chief commissioner to grant sanction. Nor is it open to a joint commissioner to grant sanction. It is a commissioner alone who can grant sanction. Now this is a problem that arises in a number of cases which were reopened at the time when the TOLA was in place. Again, the transition from the old law to the new law. So what happened is, under the old law, the reopening was like this. If the reopening is within 4 years from the end of the relevant assessment year, the reopening would be done with the prior approval of the Joint Commissioner of Income Tax. If it was beyond 4 years from the end of the relevant assessment year, the reopening would be done with the prior approval of, it said, the Principal Chief Commissioner, the Chief Commissioner, the Principal Commissioner or the Commissioner. Now, I have not seen a single case where the PCC or the CC has granted sanction. Normally in all those cases, only the commissioners were granting sanction. If there is a Principal Commissioner, the Principal Commissioner, otherwise the Commissioner was granting the sanction. Now the new law said, if the reopening is within 3 years, then the reopening which should be by the PCIT, the PDIT, the CIT or the DIT. So we will remember it as Principal Commissioner or Commissioner. And if it is beyond 3 years and up to 10 years, then the reopening can be done only by the Principal Chief Commissioner, Principal Director General, Chief Commissioner or the Director General's approval. So for convenience, we will remember this as Principal Chief Commissioner or Chief Commissioner. Now what happened was, during this TOLA period, that extended period which I was talking about, the 3-month period I was talking about, all notices were issued with prior approval of the Commissioner or Principal Commissioner of Income Tax. Nowhere they took the sanction of the Chief Commissioner or the Principal Chief Commissioner. even where the reopening was beyond the 3-year period. Now that was subject to challenge. The Bombay High Court, in the decision that I was just referring to, held that approval must have been granted by the Principal Chief Commissioner or Chief Commissioner. If approval has been granted by Principal Commissioner or Commissioner, it is invalid. A similar view was taken by the Bombay High Court in another case called JM Financial, by the Delhi High Court in a case called Twilight Infrastructure, the Bombay High Court in a case called Siemens Financial, and recently by the Madras High Court in a case called Shivan Ramachandran. In all of these, they have held that the TOLA does not, as held in Ashish Agarwal, does not extend the old law to be followed in the extended period. It only extends the time limit for issuance of notice. New procedure must be followed. Remember, the Supreme Court in Ashish Agarwal was only concerned about the notice. It was not concerned about the sanction. Now, in all cases we find, or at least in many cases we find, that the sanction has been granted like this and is therefore invalid. Quickly talking about something very similar, the time limit for reopening. Again, you have a very interesting board circular which talks of a travel back in time. I have tried to read that circular more than once, but I have failed to understand. What they say is that as a result of the decision of the Supreme Court in Ashish Agarwal, there will be a travel back in time. See, what did the Supreme Court say? For a minute, we will assume that Ashish Agarwal is applicable to all assessees. I said a little earlier that in my opinion it does not. But even for a minute, if I assume that it applies to all assessees, now you have a proviso below 149, the first proviso below section 149, which clearly says that if a reopening is barred under the old law, then the new law, reopening should not be done. Reopening should not be done under the new law. To take simple example, under the old law, we were divided into effectively 3 categories for reopening. Category number 1, within 4 years from the end of the relevant assessment year. Category number 2, I will say, is beyond 4 years and up to 6 years from the end of the relevant assessment year. But if an assessment has been completed in 143.3, no failure on the part of SC to make a full and true disclosure, 4 years is the end. And a category number 3 is if there is a foreign asset, reopening can be done up to 16 years from end of relevant assessment. This is how the old classification was. Now the new category is very simple. Normally it is 3 years from the end of the relevant assessment year. Beyond 3 years and up to 10 years is the maximum. Up to 10 years from the end of the relevant assessment year, you can reopen, provided the income escaping assessment is at least 50 lakh rupees and provided it is represented in the form of assets, expenditure, etc. or is referred to in books of account and documents. Right? So, you can, for a minute, let us forget the 16 years. Then you will understand that even without a foreign asset, under the old law, you could reopen only for 6 years. But under the new law, you are able to reopen for 10 years. Now, what the proviso talks about is to say that if the old law did not permit you to reopen, then the reopening under the new law is also barred. Because that is a transition provision. Right? Once the transition goes, after a few years this transition will go off, then no, there is no problem. So what happened was, particularly with reference to assessment years 13-14 and 14-15, lot of controversy arose. Because you will see, as on 31/3/2021, the 4-year period would have 6-year period would have lapsed for 13-14 and 14-15. Now the board issued a circular saying there is a travel back in time as a result of the decision of Ashish Agarwal. Therefore, 13-14 and 14-15 can also be reopened. Now, number of high courts have come on that. One of them is New India Assurance Company of the Bombay High Court, where the Bombay High Court would say that reopening is not possible in such circumstances because of the proviso to 149, and they have categorically held that the circular of the board is a wrong understanding of the decision of Supreme Court in Ashish Agarwal. Now, I will go a step further. Rightly or wrongly, the Bombay High Court was only concerned about 6-year period. Now, you can also examine one more thing. See, please remember that the old law had two limits, one 4 years, one 6 years. Right? One 4 year and one 6 year. If they want to travel beyond 4 and come to the 6 year time barrier, then there should be a failure on the part of the ST to make a full and true disclosure, provided the original assessment has been completed under 143(3). In which case, if there is no failure on the part of the ST to make a full and true disclosure, only the 4-year period operates. Which means that even under the new law, you can see whether there was a failure on the part of the ST to make a full and true disclosure. If that is not there, then not only 13-14 and 14-15, also 15-16 and 16-17 will be barred by limitation. Because the 4-year period would expired on 1/4/2021. Yes? So that is one other aspect. Now, talking about reopening again, there is a very interesting circular of the board which has been subject matter of challenge before a division bench of the Telangana High Court. Now, Telangana High Court has an interesting way of hearing writs. They don't have a single judge hearing writ petitions, they have only a division bench hearing writ petitions. All writ petitions are heard by division benches. Now, a division bench of the Telangana High Court has passed one order in the case of an issue of a notice under 148 by the jurisdictional assessing officer. Now, what happens is that there is a board notification which is issued on 29th March 2022, where they say all notices under 148 should be issued in a faceless manner. Now, what is happening in reality is that 148AB comes from the jurisdictional assessing officer, AD is passed by the jurisdictional assessing officer, along with a 148 notice from the jurisdictional assessing officer. Now, this notification vests the power only in the faceless officer. Now, the Telangana High Court would say, if the notices come after this notification from a jurisdictional assessing officer, the notice is invalid. Right? So, you may have to examine each and every case to see if it is the JAO who has issued the notice or the faceless officer who has issued the notice. I was reading one decision today, this is by the way, one decision today in the context of again Ashish Agarwal. If you will recall, I was talking about Ashish Agarwal. I was talking about Abhishar. No, I was not talking about Abhishar Bildwell. What happened in Abhishar Bildwell was a case where there was a search, and the question was, in case where assessments are already completed but not pending, what we call as unabated years, once there is a search, should a notice under 153A be issued for those years and assessment completed for those years? Supreme Court said, wherever proceedings are pending and abated, even if incriminating material is not available, 153A notices can be issued. But where they are abated because proceedings are not pending on the date of search, unless there is incriminating material, you cannot do or issue a notice under 153A. Now, what the department has started doing in a number of cases, wherever there are such circumstances, they are trying to issue a notice under 148 saying the Supreme Court only said that 153A cannot be issued, and they also mentioned in the passing that you could have issued under 148. So now they are issuing 148 saying, in exercise of my powers to issue a notice under 148, read with section 150 subsection 1, because there is a finding or direction of Supreme Court, I have an extended period to issue the 150 notice at any time, 148 notice at any time. So that has been negatived again by the Delhi High Court, where they have said no, that observation of Supreme Court is not a finding or direction of the court. It is only an observation of the court, because a finding or direction also to be given, parties must be heard. Parties must be heard. Nobody can be condemned unheard. See, the only circumstance when a person can be condemned unheard is when there is no option but to condemn him unheard. See, for example, if somebody comes and puts a pistol on your head, and there is a policeman standing there and he puts a mic across to him and says, please explain why you are holding the pistol on the person's head. That doesn't work. He will first arrest and then only probably give you an opportunity of being heard. But opportunity of being heard all the same is mandatory. When alone is the question. So the Delhi High Court would say this. Incidentally, all of us are aware about this DIN issue. That became a big issue. Number of orders have been passed without DIN. The document identification number. All the tribunals, almost all the courts have been taking a view that any document without a document identification number is invalid. And consequently, if that notice is a statutory notice, or if that is a communication by way of an order, then that order or notice is invalid. This itself is based on a circular of the board, where the board through its circular would say what are the circumstances in which you can issue an order or any communication without a DIN. And the board's instruction or circular itself would clearly say that if you are issuing it without the DIN, you can issue it only under these 5 circumstances. I am not going to the circumstances. And it go further to say that if you want to issue a notice or an order without a DIN for some reason, which fall within these 5 circumstances, you must get the prior approval of the Chief Commissioner of Income Tax, and across the order or notice mention that you are not able to obtain the DIN for this reason, and that you have got the approval of the Chief Commissioner through so and so. In fact, they have even formatted and said what is the format to be followed for that. And that very circular says if an order or a notice is issued without a DIN, then that order or notice is invalid. So tribunals and courts were continually holding that the notice is invalid. The orders are invalid. And one of the lead decisions in this was Brandix Mauritius, a decision of the Delhi High Court. Now this reached the Supreme Court. The Supreme Court has passed an interim order staying the order of the Delhi High Court in Brandix Mauritius, and also the order of the Delhi Tribunal in Brandix Mauritius. So as of today, if you see, there are no directions of the Supreme Court with regard to whether an order or a notice without a DIN is valid or invalid. They have only stayed these 2 decisions. In my view, the stay is operational only for Brandix Mauritius. This stay is what we call an order in personam and not in rem. It is not applicable to everybody. It is applicable only to Brandix Mauritius. Okay. Whoever has got a relief from any tribunal or court can continue to enjoy that relief as of now, excepting Brandix Mauritius. Because that is a decision where a stay has been granted by the Supreme Court. I don't know how many years it is going to be taking to get this matter finally heard and completed, but until then the DIN issue continues. We continue to raise these objections. Interestingly, the binding effect of circulars. There are a number of decisions. A decision of the Supreme Court in UCO Bank, the decision of the Supreme Court in Navneet Lal Javeri, etc., where Supreme Court has time and again been holding that orders of circulars of the board are binding on all subordinate authorities. Now, interestingly, A similar question came to be discussed by the Supreme Court in a case called Ahmedabad Urban, the Urban Development Authority, which was a decision rendered in the context of charitable trusts. That was in the context of the proviso to 215, the effect of the proviso. And one of the aspects that was discussed was with regard to the binding effect of a circular. And what the Supreme Court said there was, a circular of the board does not bind this court, A, or any court for that matter. B, it said a circular of the board which is contrary to the act does not even bind the subordinates. Incidentally, that's a larger bench than all what I said earlier. So, if you can find that it is contrary to act, then it is not binding. But to my mind, the DIN circular is not contrary to the act. The act itself talks about various safeguards, and the finance minister came on record saying hereafter no notice will be issued without a number, or no order will be issued without a number. This was basically to avoid harassment to the public and to ensure that there was an audit trail. So if such a notice is issued or order is issued, then I would still think that it is invalid, but we'll have to wait for the Supreme Court to decide. Interestingly, I was able to see a couple of decisions, one of which was quite shocking to me, though, in favor of assessing, where they said that if an approval is granted by a higher authority, that approval should also contain a DIN. I thought that is not necessary. This is stretching it too far. A communication from an officer to an assessee should contain a DIN. I don't think a communication between two officers in the department must contain a DIN. A sanction given by a higher authority to a lower authority is a communication between them. I am entitled to get a copy, no doubt, but it is not a communication to me. Right? There are a couple of decisions which I don't want to touch upon, but that was quite surprising to me, because to my mind that may not be the correct position in law. I would agree that if it is a communication to assessee, then yes, there should be a DIN which is there in the body of the order, and if it is not found in the body of the order, it should fall within the 5 circumstances that are contemplated by circular, and should also be followed by a prior approval and the note stating why it could not have been done and which commissioner granted approval on which date. The next issue I will quickly deal with is with TDS on discounts. Now basically this is a decision of the Supreme Court in a case called Bharati Cellular Limited. It's under the old, it's probably under 194H. Lot of water has flown under the bridge after 194H. Earlier we used to have some 4 or 5 sections on TDS. In fact, I still remember those days when I was young. There was a big debate whether chartered accountants will fall under 194C. Okay. What happened was there was a decision of Supreme Court in a case called Associated Cement Company, where they said every work will be covered by 194C. That was a case where stationary wagons were there and goods were being loaded and unloaded. Somewhere the Supreme Court said every work will be covered by 194C. Immediately board issued circular. 194C will cover chartered accountant, everybody. So what we all did diligently went to every high court in the country. Every high court in the country said no, Supreme Court only talk in the context of work, not in the context of professional service. So we successfully got out of 5% and come to 2% and come to 10%. Right? So today if you see the TDS provisions, there is TDS on sale, there is TDS on perquisite, there is TDS on benefit, there is TDS on everything, every conceivable thing. Or if it is not TDS, it is TCS. Some form of collecting of tax. Or if neither of this is there, you also have an equalization levy. In some form or the other, the government is able to collect tax at the threshold. Now the idea of TDS is twofold. TDS or TCS or any of it is twofold. One purpose is to ensure that taxes are collected at the earliest point. But the second and the most important is for a trail to be left, where nobody can suppress it. And today you know, the minute TDS is there or TCS is there, your 26 AS will reflect it. And it can easily be matched to your return. That's the purpose. Now, this is a case where Bharti Cellular had a number of persons who are called franchisee partners who are selling their prepaid SIMs. So what they do is they buy the SIM at say a price and sell it at a higher price in the market. I buy it at 100 rupees but sell it to the end consumer at 120 rupees. So 20 rupees is the discount that Bharti Cellular offers to me as a franchise. The question was whether this 20 rupees was subject to TDS under 194H. The Supreme Court, after a great deal of analysis, said this is a principal to principal transaction, not a principal to agent transaction, because the franchisee is not an agent of the principal. But when he sells the SIM card, the privity is between the consumer and the service provider. Once I am a franchisee and I sell you Bharti Cellular's Airtel card, then whatever happens you ask Bharti Cellular, not me. I am out of the picture. Right? After a great deal of analysis said this is not a discount which will fall within the, this is a discount but not a commission which will fall within the meaning of my connotation. Okay. But not one which is a commission which will fall under 194H. Now, primarily I may not have even been bothered about this decision, but for the fact that a similar issue can now arise. A similar issue can now arise in the context of 194R. Now, in the context of 194R, I was seeing a circular number 12 of 2022 dated 16/6/2022. Now, before I get into this circular, remember that this is not a circular issued in terms of section 119 of the Act by the board. Earlier, circulars normally were issued only in terms of 119 by the board, which gave the power to the board to issue circulars. Now what they do is, in each and every procedural provision, they make an express provision which says the board may issue such clarifications as are necessary for proper administration of the provision. Now remember, you cannot hereafter say these circulars don't bind the assessee. A circular issued under 119 does not bind an assessee. It binds the department probably. But a circular issued in exercise of powers vested in specific provisions like 194 are bind assessees also. Right? Now looking at that, in 194R, there is a circular number 12 of 2022 dated 16/6/2022 in which there is a question number 4 on sales discount, cash discount, etc. They talk of two specific examples. One is a discount given on sale. Whether TDS is applicable, they say this will cause undue hardship, therefore no TDS is required. So if I sell a 100 rupee gift, a particle to you for 90 rupees, I'm giving you a discount of 10 rupees. Normally 194R would have required me to deduct tax and source of the 10 rupees. But this circular clearly says TDS is not applicable because of difficulty. Likewise, they take another example. They say, supposing somebody is buying 10 articles but will effectively get 12. This happens in case of consumer durables very commonly. What happens is, say for example, I will lift 10 LG televisions from LG as Vivek and company say. But the minute I lift 10, LG will give me 12. I will pay for 10 but get 12 televisions. right? So what happens in the process is those two televisions are free to me, but I can sell them at MRP. That is again some form of a discount. There also they clarify that no TDS is required under 194R. But they say in every other case where there is any discount in any manner other than these two, the TDS provisions will apply under 194R. So one can comfortably conclude that the TDS provisions will not apply even under 194R for a regular discount like in the case of Bharati Service, even after the advent of section 194R. It is not merely 194H, because Supreme Court there said that is not commission but discount. Therefore TDS is not applicable. So the minute you say discount, will 194R come into play? The answer is no, because of this board circular. The next is with regard to initiation of penalty under 271C. Now what happens is that 271C talks of penalty for failure to deduct tax at source, etc. And likewise you have various penalties under 27 for violation of the provisions of 269SS, 269T, etc. Now what is the time limit for initiation of penalty? In this particular case, the Delhi High Court found that there was a delay of about 4 years in the initiation of the notice. SLP dismissed by Supreme Court, arising from the decision of the Delhi High Court in a case called Clicks Capital. Right? Now what happens is that the Delhi High Court says that since 4 years of law being elapsed, it's a woefully long period, and therefore no initiation of penalty is permitted. And Supreme Court SLP has been dismissed. I was talking about the same rule in the context of 269SS and T, where you were talking about loans taken in cash, repaid in cash, etc., which can apply to 269ST, etc. Now their questions have arisen whether the initiation can be after a length of time by the Joint Commissioner. See what happens in 269SS and T violations. It is not the AO who levies the penalty, it is the Joint Commissioner who levies the penalty, or the Additional Commissioner who levies the penalty. There is a communication from the AO to the additional on a particular day. The additional issues a notice on a different day. Now we have found number of cases where the delay has been 3-4 years after the AO has communicated to additional. Question number 1, if there is a long gap, whether it is valid. We have a number of decisions where the courts have held that it is not valid, similar to what you see in the decision taken by the Delhi High Court in the context of 271C. And more importantly, they say that the initiation should be through the order. So if there is a 143.3 order, then they should in that order say 269SST violation, penalty proceedings under 271D and E initiated separately. If they don't say that, they again say that it is not a valid initiation of penalty. So two things, notice within reasonable time, and two is that it should be initiated through the order, which is the order underlying which gives rise to the levy of penalty. Just like your 271(1)(c) or 270(a). I will again go quickly into one other decision of the Rajasthan High Court, where the issue was with regard to a 264 and writ petition arising from a 264. Now this is again a very, very interesting decision, not because of the 264 at all, but because it concerns the mechanism underlying 270AA. Now all of you are aware that 270A is a new penalty provision which has succeeded 271(1)(c). 271(1)(c) earlier talked of concealment or furnishing of inaccurate particulars of income. 270A would now talk about a case where there is an underreporting of income or an underreporting as a result of misreporting of income. So we'll quickly remember it as just this much: underreporting versus misreporting. Underreporting, penalty is 50% of the tax. Misreporting, the penalty is 200% of the tax. Now for underreporting, you also have a mechanism in 270AA which provides that immunity can be granted from penalty and prosecution, provided you pay the taxes that are demanded within the time and you don't file an appeal against the order. I am not on a session on penalties, so I won't go much into the depth of it. But these are two conditions that are to be satisfied for a 270AA immunity, and we would normally understand that the immunity is available only for underreporting and not for misreporting. Now what happened in this case was that before the Rajasthan High Court, which was before the Rajasthan High Court, assessee prayed for immunity under 270AA before the AO. Immunity was declined. The assessee chose to go on a 264 before the commissioner, where the commissioner can revise an order, which is not an order governed by 263. 263 is an order which is erroneous and prejudicial to the revenue. So to put it very simply, 263 will be against you. When a 264 order is passed, it will either keep me status quo or will make me better off. It will never be against me. To put it very simply. Right? He moved a 264. The commissioner rejected the 264 petition, against which a writ petition was filed. Now there were very interesting observations of the Supreme Court. The Supreme Court said the order passed under 270AA3 is a non-speaking order, and 2, it said the order passed under 270AA refusing to grant the immunity was passed behind the back of the SSE without giving him an opportunity of being heard. Right? Now to me, or to any of us, 270AA would look so simple. When do you get the immunity? When it is underreported. How do you know it is underreporting? The order under 143.3 will say, or 148.7 will say, look, penalty initiated separately for underreporting of income. What are the conditions? You must have paid the tax, you must not have filed an appeal. These two are easily verifiable. What is the need for an opportunity for me for all this? Officer has written underreporting, no problem. Arithmetic, have I paid the tax? Notice of demand is there, 1,20,000 to be paid, 1 crore 40 lakh to be paid. That amount has we got a challan. Is it there in the 26 AS? Over. Have I filed an appeal? Not filed an appeal, verifiable online. Then why should an opportunity be? This decision, in my understanding, that means, says that, in effect, that even though the officer may have initiated the penalty under 270A9 for misreporting, he should hear you again in the 270AA proceeding and can change the view that it is not a misreporting but an underreporting and grant you the immunity. Because if you read the full facts of that case itself, the officer had initiated under 270A9, not under 270A6, which is misreporting and not underreporting. Right? So, even though an officer may choose to initiate under 270A9, my understanding today, after reading this decision, is I can approach the officer under 270AA, argue my case that it is not a misreporting but an underreporting, and in which case the AO can grant me immunity if he finds that I am right that it is only an underreporting. Right? Interestingly, I was also seeing a couple of two decisions which are continuations of what I see in the context of 270AA. Now 270AA has watertight dates. It says you must approach the AO within a stipulated time. Now what happens if there is a delay? Now the Madras High Court, there is one decision in a case called Nataraj and Anandkumar, where the returned income and assessed income was the same. They said one day, few days delay, it is all right, it should have been condoned. Of course, you you may ask me if returned income and assessed income are the same, how penalty will arise? That was a reopened case. Assessee files the return for the first time under 148, where he shows an income. So your starting point is not the 148 returned income, your starting point is the original returned income, or the originally assessed income, or the originally 143 determined income. And if there is no original return, 0. So they said it is all right. Now there is a Hyderabad tribunal which says there is an inherent power to the AO to condone delay. That goes one step further and probably permits us to condone delays in all such cases. I will deal with the next two cases very quickly. Both of them are largely related to searches and information that are obtained on various in electronic forms. There is a decision of the Karnataka High Court in a case called Sunil Kumar Sharma. That was originally a single judge's order, now approved by the division bench, where they say any material found in a loose sheet without corroborative evidence cannot be used against an assessee. Now the background of this goes back to the decision of the Supreme Court in a case called V.C. Shukla, which is popularly known as a Jain Diary case. It is a Jain Hawala case, right? Where certain information by way of loose sheets or a diary was found in a third party premises. The question was, if my name is found in your diary during your search, whether it can be used against me. V.C. Shukla was not an income tax case. The Supreme Court said in no uncategorical terms that it cannot be used against a third party. See, for example, if I feel like it, I have the list of all of you there. Against each one of you, I will write 100 crore in my book and keep it. Apart from CPE credit, you will get ED and income tax notices. You will get 3 hours CPE credit, and for the rest of your life, you will be fighting. Of course, I will also fight. That is my profession, so I have no problem. Right? But then at least 10 or 20 of you will become my clients for the fight that I am doing. I will get fees from you. But look at how stupid it can be if somebody can do this and somebody else can get into a problem. So I can write some VIP's name and put 500 crores and keep it. And that person has to answer. So it becomes crazy. The Supreme Court said no. The same view was taken again by the Supreme Court in a case called Common Cause, which was a public interest litigation. Now that very view has been followed by a number of high courts and the tribunal, saying that material found in a third party premises by way of a loose sheet or a diary cannot be used against another third party. Now this decision is very unique because in Sunil Kumar Sharma's case, the loose sheet was found in his premises. And they said it cannot be used against him unless there is corroborative material. So this can be extremely useful in every such case, which clearly provides that unless there is corroborative material, you cannot use against me. Now the next decision I will quickly touch through is digital evidence found during a search, etc. Now two aspects. One is a recent decision of the Madras High Court in a case called Saravana Selvaratna, where the Madras High Court found that there is a manual issued by the CBDT for using electronic evidence or digital evidence collected. And they found that the manual that was issued had not been followed. I don't want to run through the manual because it's very highly technical. Each one of you may do the homework by yourself, because that is not a one-day session. And I am not competent on many of those because it's a lot of things go above my head, but I have young people in my office who will be able to understand it. Right? So I will use them when I need. But what they effectively say is if the manual is not followed, the assessment is bad. Of course, that was a writ petition, therefore they ultimately remitted the matter back to the file of the AO to redo it after following the manual. But then, as I was reading it, I was quite surprised because I found that many of the things in the manual are very difficult to follow at a later point. Because they should have been done then and there. So you could probably still urge that the assessment itself is bad at later points in time. This of course was set aside in a writ petition. Well, the law will take its course. Incidentally, there is under the Evidence Act a 65B(4) which lays down how electronic evidence must be gathered and used in evidence. Now very often people say law of evidence is not applicable to income tax. That is not a correct statement. The rules of evidence are not applicable to income tax. The law of evidence is applicable. Only that the strict rules need not be followed, but the laws are applicable. 65B(4) is very much applicable, and 65B(4) would say what are the circumstances and how an electronic evidence can be used by the department against not by a department, by any person for that matter in a court of law. And it would talk about identifying the electronic material, etc. See, what happens today is, many a time what I see is a pen drive is seized. They go, they open the pen drive, and then they say, we found all this, explain. Actually, they can't do it at all. First, to seize the pen drive, there is a mechanism that is there in the manual. Next, to open the pen drive, there is a mechanism. 3, before they open, and they must get a certificate from the person from whose possession it was seized, etc. There are rules in 65B(4). Only if this is satisfied can they use electronic evidence. But I find that in many cases that is broadly lacking, and I am sure all of you must have followed the case of Sendilwala. One of the points that he is making is that electronic material has been seized from my premises, no doubt, but material have been planted into that electronic evidence. So if they have not followed the procedure under 65B(4), then the department is in trouble, whichever department it is. But if they have followed this procedure and the respective manuals, then there would be no difficulty in that process. The last decision I will just, or two more, I will not take more than 5 minutes of your time because the next speaker should be ready. One is on TDS. Now you will all recall in the recent past we have been getting lot of prosecution notices from the TDS department. One, I think in every case of prosecution you need to make out a case where you can say that there is reasonable cause for the failure to remit the TDS within the stipulated time A. B, wherever possible you must be able to demonstrate that you were able to or you had paid the TDS even before notice was received from department. B. And C, most importantly, when you say reasonable cause, the reasonable cause can be even extreme lack of money or the high liquidity crunches that a person was going through, for all of which you have a number of decisions. There is also notices that are issued in terms of 235 treating a person as principal officer. Now 235 only identifies or says that an AO should issue notice that you are a principal officer. Then it is for you to demonstrate that you are not a principal officer, because tomorrow if there is a prosecution launched, it will be launched against the company and every principal officer. So they will launch it against, they will issue notice to you, it is for you to show why you are not. They don't have to pass an order treating you as a principal officer in the strict sense of that word. They issue only notice at the first stage. Then finally they pass an order and then they proceed. Now the law is that a principal officer must be engaged in the management and administration of the affairs of the company. You have a decision of the Madras High Court in a case called Kalanidhi Maran, where the issue was how do you find out whether a person was involved in management and administration. That is something each one can look at before drafting a reply. Likewise, what could be reasonable cause may vary from case to case, but largely most of the companies will come and tell you, I didn't have money. Per se, I don't know whether government department will agree, but most of them are now saying, okay, you at least compound it, but be that as it may, if prosecution does get launched, your defenses can definitely be even lack of adequate money for the payment of the tax deducted. Last decision, or rather there are two of them. One is the Pune bench of the tribunal, the other is the Madras bench of the tribunal. Now both of these are on connected issues of a public charitable trust. Now in the Pune bench of the tribunal, the issue was there is an existing trust which has been in operation since 2000, say. The law got amended saying everybody must apply for a provisional registration and then a permanent registration. Now what this trust did was, it applied for the permanent registration after 6 months from the commencement of the act. Now unfortunately the law says you must apply within 6 months from the commencement of activity. My activity started in 2000. In 2020 I am already 20 years old. Now the Pune bench of the tribunal would say even beyond 6 months an ATG application should be admitted, you should condone the delay. And there is an even more interesting decision of the Chennai bench of the tribunal in a case called CIT 1982 Charitable Trust. That is the name of the case. Where you will recall that for public charitable trust, there are two registrations. One is a 12A registration, another is a ATG registration. Now the board issued a circular extending the time for a 12A registration up to 39/23. But they didn't make a corresponding extension under ATG. So if I don't have a 12A, I can't get an ATG. If my 12A time frame is extended, logically ATG should have been extended, but the board did not issue a circular. But the Madras tribunal, Chennai tribunal would say that though there is no circular, you have to read it harmoniously with the intention. And they come to conclude that it is enough that an ATG application is also made within the time that is extended by the circular for the purpose of 12A. These, friends, are some of the decisions that I thought I should share with you. I have already eaten into a little bit of time of the next speaker. So I will stop here. Unless there are specific questions, I must be grateful to the Institute for making me read all this. But for this, I don't think I would have read it in this depth. And all of you for a very patient hearing. Thank you very much.
There is no time limit to issue a notice by the officer. There is no time limit for the officer to issue notice.
See, the provisions of 269SS and 269T do not talk about time limit for issuance of notice. The only time limits that are set are in 275 for completion of proceedings. The completion of proceedings, according to revenue, starts from the date of issuance of notice. But there are a number of decisions today which say that notice must be issued within reasonable time, and initiation must be through the order, otherwise the penalty itself is barred by time.
Order in the case of the lower officers. But all is said at the same.
I am talking of one decision of the Supreme Court itself.
No, sir. I mean, it's an officer, the order.
He is talking about the initiation of penalty in
The initiation should be stated in the 143(3) order.
CIT appeals cannot do it.
CIT appeals if he is.
When he sees that there is because there is no time limit to issue the notice, can he?
No, CIT appeal cannot issue a notice. Only a joint commissioner or additional commissioner can issue a notice. CIT appeal is not competent to levy the
initiation of penalty should be initiated by the AO while passing the order.
Suppose if the AO misses the next time.
If the AO misses, the miss is dismissed.
This forever.
Sir, I have a basic question, sir. In presumptive income, for example, so if I have a turnover of say 40 lakhs as a professional and I am using 50% presumptive income basis, if my actual profit is say 30.
Let me first of all clarify two things. One, out of syllabus. Most people here will get unhappy with my reply. If you still want me to continue, I have no problem. Because it is my personal view that the law does not mandate you to offer 50%. It says 50% or such higher sum. So if you have a higher profit, you are under an obligation to offer the higher sum, not 50%. If you are unhappy with my answer, so be it.
That's what, sir. That's the thing, sir. See, some people are of opinion that no, it's optional to you. Some people are of opinion like you, sir.
See, remember two things. Today, if you offer 50% as an officer, I can ask no questions. Let us assume you have an income of 40 lakh, you are offering 20 lakh. Gross receipts is 40 lakh, you are offering 20 lakh, I will ask no question. But tomorrow, if you show me 30 lakhs is invested in a house property, I will ask you where is the balance 10 lakh. And if you say I earned it there, I am not going to agree. I will add this 10 lakhs under 69 as an unexplained investment, taxing you at 75%. If I am the officer, this is what I will do. Be happy if I am not. I am not on that side. I only come to this building, not to the next one.
Thank you, sir. Thank you.
This is an answer which will make many of us here unhappy. But I am firmly of this view, whether it is 44 AD or ADA, it is not an immunity provision. It is not a provision which says you offer 8% or 50%, I will watch after that. No. It doesn't tie my hands at all to make an inquiry of any other investment, deposits, expenditure, etc. in that or the next year. Only that for that year's business income, I will not ask any question. So logically what you must do is, if you have 30 lakh income but you are offering only 20 lakh, what you do is you draw the 10 lakh also from the bank and spend it in unaccounted ways. Then no questions will ever come unless they find out that unexplained expenditure. Don't leave trail of that. This is the most simple answer I can give from the mic here.
Thank you very much, CAT Banusekar sir, for the wonderful and lively session. A big round of applause for Banusekar sir. I now request CA Padmaja to come forward and present a memento as a SIRC's token of love and affection to CAT Banusekar. Thank you, Banusekar sir. We are quickly moving to the next technical session. We have with us CA Ashwinkumar, who will take us through recent decisions in GST. May I now request Ashwin to come and occupy the desk, please. Ashwinkumar, a chartered accountant and a BCom graduate, delivered 20 plus lectures in GST in last 1.5 years. Invited as a group leader at the Confederation of GST Professional of India (RRC) program. He contributed articles in various professional forums like BCA's DTPA Kolkata, and he is a faculty for GST at various professional institutions. And end-to-end GST compliance and support for PSUs having turnover more than 2,500 crores. He is doing GST health check services in subsidiary of RBI in currency note printing, Coffee and Coir Industries Limited, Pharma industry, media industry, freight forwarding, license support for debt audit under Section 65, and customized opinion for solving complex IDT problems. With this brief, I have great pleasure in presenting before you CA Ashwinkumar to take us through recent decisions in GST. May I now request CA Sohan Parmar to come forward and present a health bouquet and memento to. Okay. Any senior member can come forward to present him with the memento and shawl. Please volunteer yourself. Yeah. May I know your name, please, sir? Sairam. Yeah. Requesting Sairam, sir, to come forward and present a health bouquet and a memento to CA Ashwinkumar. Thank you very much, Sairam, sir. Over to Ashwinkumar.
Good evening, all. Good evening, all my learned friends. I am CAP Ashwinkumar, practicing chartered accountant in GST and other indirect tax. Friends, I know we were drenched with income tax judgments for the last 1.5 years. No copious extracts from Prosecution prose would be enough to encompass his erudite in the subject. Simply mind blown by his deliberation. And for last 1.5 hours, I could sense some rapt attention from the august audience here. So, friends, before I embark on this subject, I would like to, give a brief insight. This is the period where we are being draining with notices in GST. This GST law, the problem is, the first 6 to 7 years, it is in its nascent stage, it is moving to its growth stage. The law is in a penumbral zone, it is in rife with penumbral zones, meaning thereby there are so many grey areas in it, which are being given the focus or the limelight. In this context, I would like to bring some of the recent judgments that has come in the last 2 months. I've arranged my PPT section wise. In context of supply, let us go through what are the judgments that have come. First is Yonex India Private Limited versus Union of India. Now, there were slew of notices that were coming from Karnataka belt in context of whether holding company, holding shares in a subsidiary company per se, the activity of holding shares in a subsidiary company, would it amount to supply of service? So there are slew of notices. I know, the passion to collect the revenue from the department's end is glaringly palpable because the matter has reached the High Court level. So you could sense the seriousness of the amount of notices that have come in this context. And this classification issue, I would say, this is a landfill of grenades which can explode at any time. I would like to share a small story. I would say like this. I saw a new creature in the planet. I called it as a monkey, and I felt it could also be classified as a turkey, which is a bird. And department, to my surprise, they classified it as a donkey. And why did they classify? When I came to know, they tried to classify this new creature by touching the tail, it kicked. So the point is, the classification, the world of classification is yet to reach its full potential, I would say, on account of the fact that notices have now only started coming from this area. So activity of holding shares per se by the holding company in the subsidiary company, would it amount to supply of service? This was the issue. And before the circular came, there was one circular 196/08/23. There were several notices which were issued to the various assessees, especially in the Karnataka belt. We all know securities are neither goods nor services, and also since it is neither goods nor services, activity of holding shares per se by the holding company in subsidiary company, in no stretch of imagination, it could be called as a supply. There is no supply at all. Just why the department issued the showcase notice? The point was on notification 8/17, where in that notification there was one SAC code 997171. The SAC code reads as follows: services provided by, it is not holding shares, services provided by holding company by way of holding shares in the subsidiary company for the purpose of what? Owning the controlling interest is a supply of service, and it was liable to GST at 18%. So basis this classification code, the department gave notices that holding company holding shares in a subsidiary company would amount to supply of service and liable to GST at 18%. So luckily Karnataka High Court was the savior, and what it did, it quashed the SCNs, and circular, in light of the circular that department has issued, the matter has reached the CBIC, and CBIC rightfully or thankfully gave the circular 196 clarifying that it is not a supply of service. Securities are neither goods nor services. Any activities which are done by holding to the subsidiary, probably it could be classified as a supply of service. By way of holding shares, The activity of holding shares will not amount to supply of service. Besides that, friends, I would like to focus on one minute. Yes. Besides that, there are some principles which I want to discuss with regard to classification. I brought out those principles. Who has the burden of proof to say whether it is a supply of goods? I want to classify apple as orange. Let us say department wants to classify apple as an orange. Now, who has the burden of proof that this is an orange, not an apple, to prove that this is an orange and not an apple? It is the burden of proof is on the department to say that this goods is particularly classifiable as X or Y goods. And you can rely upon the Hindustan Farado judgment in this context, where the aspect of sheet, whether it could be classified as an asbestos or ring or not, that was the issue. Sheet is different, ring is different. So therefore, the department, they failed to discharge the burden. And in that judgment, it is a locus classicus, I would say, to understand the burden of proof is on the department. Next, just because there is a classification in existence, whether it presupposes the concept of supply. A classification entry is there. What made or what triggered the department to issue show cause notice? There was one classification entry. So whether classification entry presupposes the concept of supply, the answer is no. You can rely upon the judgment of Aparthi Private Limited versus Union of India, Bombay High Court judgment. The citation is there. So these are the two legal principles which I want to discuss in connection with this. Moving on to the next judgment. Now, often the consultant's role, I would say, it is being as an authorized representative representing the client. You are being given an obnoxious task of handling an overzealous tax authority and an over-ambitious taxpayer. One end, the passion to collect the revenue will be visible. Other end, the taxpayer will be trying to pay even a single penny. So here, this is a classic case. I want to bring that glaring contrast. First case, the passion to collect revenue was there. Second case, the assessee took an aggressive stand. Let us see that. You might be knowing this JD agreements, where there is a landowner and land developer have entered into an agreement, joint development agreement. Now the question is, I am transferring the developmental right to the land developer to develop the building there. Now the question what it came before the court, whether the transfer of developmental right, is it a right in an immovable property? Second thing, whether it will amount to sale of land. The right in an immovable property is also an immovable property, so therefore it will amount to sale of land or not. The assessee argued in this way. See, by transferring the developmental right to you, at the end of the day, I sell the land and I get a building as a consideration. At the end of the day, this happens. So what I effectively do by entering into a developmental right, he oversimplified the argument, saying, I sell the land, so it is outside the purview of Schedule 3. That was the argument of the assessee. Sorry to say, the Honorable Madras High Court, Telangana High Court, rapped him on the knuckles. What the Telangana High Court categorically held, that the activity of until the developmental right is over, was when you give a developmental right, are you giving the land to him? Is the agreement, clauses are written in that way? Is the ownership transferred to you, to the land developer, while the development of building is taking place? So there is no transfer of ownership happening at all. Point number one. And second point, second observation, by entering into a developmental right, what I do is I give a license to occupy the land. I only give a license to occupy the land. Third point, it is clearly a supply of service. Why? Because post the developmental right, I enter into one more deed. What? For selling that land to whom? Either to the purchaser or to the land developer. So therefore, one more activity is happening post that, So it cannot be categorized as what? As an immovable property, sale of land outside the purview of GST law. Now the connected judgments which I want to bring. When you peruse the judgment, interesting two judgments were referred. The basis to say that there is a supply of service in existence was relying upon the Commissioner of Income Tax versus Balbir Singh Maini judgment 2018 in income tax. Para 25 of the judgment was like to bring the fact that until the developmental right or the agreement is over, the land is not getting transferred. What I effectively do is only I give the license to occupy the land. So therefore, it is a supply of service. This was the basis for arriving at the judgment. And second point, what I want to say, the assessee argued with some of the specific contract clauses which were favorable to him. We are exploiting those clauses. Now the interesting read when I went through the judgment, it is Super Poly Fabrics Limited. There can be no doubt that a document has been read as whole, not specific clauses you can take the benefit of it. So this is the way it was countered. And on reading the agreement holistically, the Telangana High Court gave the verdict that it is a supply of service and it is liable to GST. Now moving on to the third judgment. Sri Ramu College of Arts and Science versus Assistant Commissioner, another case from Madras High Court. What has happened? The assessee was a self-financing or management college, and the Bharatiyar University, they want to get affiliated with the Bharatiyar University Coimbatore. Now the Bharatiyar University, what they do, they charge some bundle of fees for getting affiliated. Application fee is charged, affiliation fee for each course is charged, one-time affiliation fee is charged. So effectively, for affiliating with the university, what is meant by affiliation? Affiliation is nothing but extending the privilege whatever the university has to those colleges. That is referred as affiliation. Now, the activity of what? Charging the affiliation fee for getting the recognition under that university. Is it an exempt supply? Is it a service provided to an education institution? So the Bharatiyar University went for an AAR, advanced ruling, and Tamil Nadu advanced ruling, it came against the Bharatiyar University. Now the case was filed by the college, not by the university. The case is filed by the college, asking this activity, why can't it be exempt under entry 66B clause 4? What is that entry 66B clause 4? Admission to a conduct of an examination, whether under this entry this activity would come or not. It's like, I understand, it's like monkey includes donkey, it is like that, where they are overstretching the argument. Anyways, the assessee has placed an argument. What were the interesting propositions that came from assessee's perspective? Without affiliation, examination cannot be conducted. These two activities are intertwined. In advanced ruling, what has happened? The authority relied upon the Fitment Committee's recommendation, where the wordings were very stringent. The Fitment Committee, what recommendation it gave? Only the activity of conduct of examination or admission to an examination hall is only exempt. So, from the appellant side, that is from the petitioner's side, an argument was placed that Section 11 is not guided by the Fitment Committee's recommendation, it is guided by what is there in the law. Only two conditions are there. One, exemption can be granted. One, there is some public interest should be involved. And by way of an order, exemption can be granted. So these are the two recommendations that are there. So all these arguments were placed. But however, the Madras High Court turned down all those arguments because the language of the law, the interesting point that is coming from the judgment, the assessee argued the intention of the legislature is to cover. When you say an admission to an examination or for conduct of an examination, without affiliation it is not possible. So the intention of the legislature is to cover all those activities in connection with it, in relation to it. The language is also in relation to, so it is a term of widest import. So even affiliation fee would be exempt from tax. The Madras High Court beautifully relied upon two age-old principles of taxation. What are those principles? First one, there is no equity in tax. Equity and tax are strangers. There is no fairness in tax. And what you mean by intention of a legislature? This is a very important point. And you'll often find people saying, this is the intention of the legislature. Now, the point is, what is meant by intention of legislature? I have referred one of the interesting judgments. The intention of the legislature in a factual sense is a myth. This is not my wordings. This is the wordings of Supreme Court in the case of DTC Mazdoor Congress versus DTC. Yes, Teletransport Corporation. The point is, intention of legislature in a factual sense is a myth. So the courts draw the intention of the legislature only from what is written in the act. What is written in the act, through that only court draw, and not what the act intended to say. Intention is drawn from the words that are present in the act. A statute is an edict of the legislature. A statute is an edict of the legislature. The body and mind of the legislature is the statute. The words, what is written that, through which only you draw the inference. You cannot say, I will understand the intention, then I will read the law. That is not the way it operates. You cannot artificially vivisect the process. As you read the law, then only you will understand what is the intention of the legislature. So this is a classic point. Two principles were highlighted. You cannot overstretch the argument. When you read the entry, it is very simple. These activities are not covered. You are liable to pay the tax on it. This is the third judgment that has come from this case. Now moving on to valuation. Supreme Paradise versus Assistant Commissioner. In this case, interestingly, what has happened? There is a manufacturer, there is a distributor. So let us take this example. The Supreme Paradise are the distributors of mobile phone. The MRP, let us say, fixed on that mobile phone is 15,000 rupees. The manufacturers are instructing them to sell it at 11,000 rupees. Now the Supreme Paradise is selling at 11,000 rupees. The transaction price itself is what? 11,000 rupees, not 15,000 rupees. Now the department is issuing a show cause notice. The show cause notice says, this is a volume discount because you are dealing with huge number of mobile phones, you are dealing with it. So it is a volume discount that is given, and there is no explicit terms of the agreement or the rate at which, on what basis this 4,000 rupees discount is given. It is not being aligned. So therefore, I am going to disallow this volume discount, and I will treat it as a subsidy linked to price. I will treat it as a subsidy linked to price, and I will add it to what? 11,000 plus 4,000, 15,000. I will not give the discount benefit, and I will tax on 15,000. This is the department's argument. These numbers are illustrational numbers, not there in the case law. Just to make things understandable, I am putting these numbers. Now the point is whether the department's contention is correct. Here, there is the court, Madras High Court has decided beautifully. It draws the distinction between a discounted price and volume discount. Both are two different parallels. They operate in two different parallels, two different poles they operate. By manufacturer instructing the dealer to sell it at 11,000 rupees, the transaction value itself is 11,000 rupees. There is nothing called discount here. Don't bring the concept of discount, don't mingle these two concepts. There is nothing called discount here. And beautiful arguments were placed by the taxpayer side. When you read the full judgments, the taxpayer side, they have failed to appreciate the business practice. They have failed to appreciate these volume discounts are generally given after the supply. It will not be recorded in the invoice. It will be transferred by way of credit note. All these things were present in the judgment. So the court categorically distinguished the volume discount and the discounted price, and it gave the verdict in favor of the taxpayer. Now the point is, the connected principles that are coming out from the judgment, which I want to discuss. When the department said, when they placed the argument, sir, on what basis they are giving this 4,000 rupees? Let us take this example. 4,000 rupees discount, on what basis are they providing? There is no basis at all. So this point has been effectively tackled by referring to H.R. Tractor's judgment, wherein it is said that discount is a commercial practice. A man of reasonable prudence, a businessman, whatever he says as a discount, that he is entitled to give. And second point is, no criteria is required for arriving at a discount rate. I can say 11,000, I can say 12,000, it is my discretion. So this is the point that has come out from this judgment. Second point, in Southern Motors versus State of Karnataka, see, it is impossible. See, when they place the argument, one more argument what they place. If it is a volume discount, how can they record? They should have recorded it in the tax invoice. It was not recorded in the tax invoice. That is where the Southern Motors judgment came for rescue. It is impracticable to do what they are expecting, because post-supply discounts or volume discounts can be passed on only by way of credit note. It cannot be recorded in the tax invoice. So these are the two judgments which will be the useful reference for you all. And this discount, I have handled an interesting case which I want to share. A show cause notice has been issued, where these pharma companies will have the practice of issuing year-end discount such that, by way of credit notes, such that their credit note value will exceed the sales. Now, as a recipient, what should I do? As a supplier, let us say I am providing the discount. My output tax liability will not be sufficient to what? To offset the credit note value. That is, the reduction will not be possible. And being the first year, what some taxpayers have done, in 17-18 especially, they have taken this as an ITC. Now the department is issuing notice. Instead of reducing the output tax, what they have done, they have taken it as an ITC. Now the department is issuing a notice. This ITC, whatever that is being taken, is not in accordance with section 16. Now what would be your grounds of defense here, if this notice is issued? Is taking of ITC, is it correct or not? Probably you can come with 4 to 5 grounds of defense. The primary ground should be the ostensible purpose of doing this act. The ostensible purpose, the apparent purpose of doing this act, of taking it as an ITC, is to reduce my output tax liability only. When I take it as an ITC, I will use it against my output tax, I will set off against my output tax. So therefore, the ostensible purpose of doing this act is to reduce the output tax liability. By taking the ITC also, the same is accomplished. This will be the first ground. The second ground of defense, what you can take, the entire issue is revenue neutral. The entire issue is revenue neutral. You have various judgments in doctrine of revenue neutrality. You have the case of British Airways, Jet Airways, given by the various tribunal decisions in service tax. You can rely upon the revenue neutrality and try to persuade and get the case done. This is what I would say. Now, coming to section 16. Section 16 related, yes please. Yes, so 180 days.
Input tax credit.
Sorry, sir?
No, see, you said that payment can be, the discount can be taken as ITC. The effectiveness is the same. Either I take it as an ITC or take it as a discount.
Correct.
The point is, for taking the ITC, one of the conditions under 16 is there should be a supply. For this transaction, how will you demonstrate supply? Receipt of goods.
Correct, I agree with you, sir. Now the point is my intention is to take it as an ITC or not? No, correct? Why did I take it as ITC? Because I am left with no other options. A 3B is a return where the negative figures are not allowed to be reported in context of output tax, correct? So if that so be the case, there is a doctrine of impossibility from my end. Lex is non cogit ad impossibilia. Law cannot compel me to do something which is not possible. Law cannot compel me to do something which is not possible. Then law itself gives me a general excuse. So the point here is, I understand by taking it as ITC, and my intention was not to take it as ITC. I have constraints in terms of what? Reporting the same in the form. So it is not real ITC in fact. By taking it as an ITC, I am accomplishing what? My reduction in output tax liability. That is the possible way where you can contemplate or you can pursue to argue this case. So that would be my submission, sir.
The department says you take the refund, you pay and take the refund.
Agreed, sir. In 17-18, there was no proper module or this kind of channelization, and refund is a right. It is not that I should always exercise the right. And if this right is not exercised, my doors are not closed. I can also have the other ways to pursue the alternate remedies. So yes, refund is one option. Where I fail to exercise it, then I can go for the other ways possible. So that is my submission. Yes. 16.4 for ITC. Okay. Why there was a belated claim of this ITC as well, sir?
Yes, sir.
Okay. That will be very interesting, where this is a double spiraling of the problem. So 16.4 again, since the intention was not to take it as ITC, it was not in substance an ITC, then you can probably argue it is not a 16.4 case where 16.4 can apply. But the point is, whatever I place here, whatever I have discussed, this will not end here. It will reach the court. One more round of litigation is awaiting before the Honorable Court. So this is the practical answer to give. Now, let us see. Shanmuga Hardware's Electrics. See, I beg to differ with this judgment, but what is the judgment? It has come in favor of the taxpayer. With due respects to Honorable Madras High Court. What has happened? The assessee has failed to claim the credit in 3B. It is appearing in 2A. But while filing GSTR 9, what he has done, he has shown this as an eligible credit. In table 6 of form GSTR 9, as of whatever he has taken the ITC, he has shown there. Now, basis this, now the assessee is arguing before the adjudication level. The matter is not closed here. The matter reaches the High Court. The High Court gives an, it is a bolt from the moon. An unusual, outlandish judgment, I would say this. A strange judgment that has come in favor of the taxpayer. The court has said, see, in GSTR 9, he has declared this as an eligible ITC. Just because he has not done something in 3B, that cannot be the basis to deny the credit. Go through the documents, case is remanded back, then decide the case on merits. Here the problem, what I would say, although the courts have given a favorable verdict, why I say I beg to differ with this judgment. On various counts, these challenges were not addressed in that judgment. That is the reason. One, when you read 16.2d, one of the conditions to take ITC is I should have furnished the return under section 39. So it comes in loggerheads with this judgment. And second point, although I agree to a great extent with the judgment in context of GSTR 9, which is a secondary evidence that which adds evidentiary value to the fact that I am eligible for ITC, and also I have the invoices with me, which are the primary evidences, basis which I do a self-assessment. But when you read section 59, it does not say that based on the primary sources and secondary sources, you self-assess your tax and furnish a return. In that way, it is not stopped. It is written there in section 59, furnish a return under section 39. Annual return is a return filed under section 44. My self-assessment itself is not complete as per section 39. My self-assessment commences the moment I hold those primary documents and assess what is my eligible ITC. But my self-assessment is complete only when I furnish a return under section 39. So since the return is not furnished, this section again, this will be the next level of challenge. If one places the argument, let us take, one takes the role of a devil's advocate, is playing this, coming up with this proposition under section 59, saying that self-assessment is complete. What answers it will be there in the taxpayer side. I have a big question mark. That is the reason why I beg to differ with this judgment. Next, Engineering Tools Corporation versus Assistant Commissioner. See, this is a classic case from Madras High Court. I was waiting for this judgment. Rather, see, it is now a common. With this, I will also link to 2A versus 3B as well. This judgment, what has happened? Show cause notice was issued to the taxpayer, saying that the dealer's registration is cancelled and is not at all in existence. So therefore, whatever the credits you have taken in connection with the dealer, I will deny the input tax credit. So this is the issue that is there. Now what the Madras High Court has done, not just Madras High Court. The first decision came, it was given by the Calcutta High Court by Justice Sivanyana, 2021. The case is LGW Industries, and followed by the 23 Garbo Traders is there. I think I quoted Garbo Traders. That is there. Now the Madras High Court has also told, even you have one more classic judgment in 2021 given by the Honorable Division Bench, Madurai Bench of Madras High Court. In the case of D.Y. Bithal, all these judgments effectively translates to one fact. If the recipient is a bona fide recipient, just because the supplier is not in existence, just because the supplier has entered into some kind of fake invoice practice or whatever the unintended practice, he has entered into this kind of practice with others, don't try to penalize the taxpayer. As long as this recipient is a bona fide recipient, it demonstrates the fact. Please understand how the demonstration will happen. It will not come through replies. You have to, section 155, cast burden on the taxpayer, burden on the recipient to claim the input tax credit. So this is a big, weapon that is there with the department. So you have to discharge your burden that I am eligible for this ITC. How you can demonstrate? Probably you can bring the genuineness by way of, bringing the e-way bills, fast-tag reports, if at all it is there, and payment slips, and so on, lorry receipts. You can bring various documents to demonstrate there is a genuineness in the movement of goods, and whatever the the ITC that is there, it's eligible. Then in such case, this judgment will be certainly a savior. A department cannot be there cannot be the basis. The basis of issuing the show cause notice itself is unwarranted. Just because a dealer's registration is cancelled, your ITC has to be denied. Now this is another classic judgment from Madras High Court, which is on section 50. Section 50 of CGST Act, this is again till 23, even I was holding a view that only if you, what is the issue? So I'll explain the facts. HR Motors, what has done? Around 33 crores of ITC, they were not able to make a transition by way of what? Filing the Tran 1 form. Only in the month of December they were able to find because of the technical glitch in the portal. During these 4 months, the HR Motor, what they have done? They will pay their tax liability in the cash ledger. They will not utilize, set off it. They will not file 3B and set off it. They will disclose, they will file, and also there was no need of filing 1 and 3B at that time. Now only you have this seriatim. So they will not file 3B. They will just deposit the money in cash for the first 4 months. Once the money got transitioned, later they filed all those pending 3B. For this intervening period, from the due date till the actual date of payment, the department demanded interest under section 51, and the provisions are retrospectively amended. Now the point is, what this Honorable Madras High Court gave. Brilliant arguments, brilliant research, it was undergone. Moment the money is deposited in your cash ledger by way of furnishing form PMT 06, the money is flowing to the government's account. How it is they are substantiating, they are relying upon 2-3 materials. One is FAQ of RBI, which clarifies FAQ number 8 of RBI, circular dated 14/4/20. It clarifies, moment the money is deposited in PMT 06, the money is flowing to the government's account. Point number 1. Point number 2, even the GST statistics, their monthly collection, whatever they give, it is based on what? The money that is deposited in cash ledger, not what? Set off that is happening through 3B. This is their another interesting research they brought. Point number 3, set off in the 3B is nothing but a debit entry, like an accounting entry passed in the books. It will not derogate, or that is not the conclusive proof of money flowing into the government's account. And besides, above all, cash ledger, once the money goes into the cash ledger, it is like, food going into the elephant's mouth. It will, you cannot use it for any other purpose. So the only way to get back the money is by way of filing refunds. So therefore, once the money is, it is like, and also they draw an analogy to central excise personal ledger concept, where they maintain a deposit, advance tax they deposit in that PL ledger. The same analogy they are drawing, and they are relying upon the income tax judgment, Modi Pond Limited, where the money, once it is deposited in that personal ledger, it is enough that the money is flowing to the government, and 43B is satisfied there. That was the decision. They also rely upon the same judgment, and they give the verdict in favor of the taxpayer. Wonderful judgment that has come in favor of the taxpayer. Let us see, there are also some challenges awaiting for the judgment. Section 54, refunds. See, it is why I brought this judgment. It's a very simple judgment. Generally, in our day-to-day practice, while filing GST refunds, what we do, we file Annexure B and all. Okay, and we might have also come across situations where we uploaded the document, but it is not appearing in the portal. In few cases, it has happened even to me. I uploaded the document, and all of a sudden, the document got vanished on the portal. I have raised grievances as well. So this has happened in this case. He has uploaded the document in the portal, and also he has given the physical copy to the adjudicating authority. The adjudicating authority is rejecting the refund, saying that these documents are not there in the portal, nor you have not brought any evidences to me that there is a technical glitch in the portal, you have raised any of those glitches in the portal, so therefore I am proceeding to reject the refund. And matter goes to the appeal. Appellate authority completely misconceives the fact, and appellate authority, what is he doing? You have not at all uploaded the document in the portal. He frames the case in that way, and also Annexure B, whatever you have uploaded, it was not signed. So therefore I proceed to reject the refund. Annexure B not signed. This is the day-to-day practice. We upload Annexure B that is not signed, non-authenticated document being furnished. So therefore I proceed to reject the refund. No matter it reaches the Madras High Court. Madras High Court, the principle of the judgment I would like to highlight. Friends, whenever a technical considerations are pitted against the substantial justice, the substantive justice, it is the cause of substantive justice to be upheld. Whenever a technical considerations are pitted against, they come in logarithms with the substantive justice, it is the cause of substantive justice to be upheld by any courts or a tax. Even as a tax collecting officer, he is supposed to do the same. So this is the same way. This just because the Annexure B is non-authenticated, that cannot be the ground to reject. You could have issued one defect notice, asked him to clear the defect, and you could have proceeded for it. So that was the Madras High Court's judgment in this case. So refund cannot be denied on these frivolous grounds. Matter is remanded back. Section 56. See, this is also another point which I want to discuss. Baba Super Minerals versus Union of India. Generally we file refund, and getting refund itself is an Herculean task, I know, practically. So, moment you file a refund application, Somehow you find a way, it goes for 1 or 2 rejections, then comes back again, you file, finally you get the refund. By that process itself, our energy gets exhausted. The taxpayer also is happy. Sir, is it enough for me if I get the refund? The point is, whenever there is a delay in processing the refund application, what is the delay period? 60 days from the date of receipt of application. The department has to sanction you the interest. The department has to sanction you the interest. Here 2 points came up before the court. One, yes, they have to sanction the interest within 60 days from the date of receipt of application. Now the question comes, what is date of receipt of application? I file RFT 1, let us say. The department issues a deficiency memo, RFT 03. Now the point is it application said to have received on that day? No. The court clarifies, without any errors, without any deficiencies, after removing the deficiency, once you file it, then only it is treated as what? The date of receipt of application happens on that day. Next question will come to your mind, I'll tell. Sir, I filed RFT 1 again, and RFT 2 is issued, which is the acknowledgement. Now the date of receipt of application, is it RFT 2 or RFT 1? That is not clarified by the judgment as well. My view, what I can was, moment RFT 2 is issued, which means the application, it is a form or it's a document that is evidencing the fact my application is complete in all respect. So the date of receipt of application is not RFT 2, I would still say it is RFT 1. The date of receipt of application means application is filed in what form? RFT 1 only. So my RFT 2, it clears the air, it says there is no deficiency in the application. That's all. So the date of receipt of application would still be what? RFT 1 filing date only. Third question that might come to you. Sir, I have filed exactly on 28/2/24, being the last date for filing refund for 21/22. Let us take this example. Now the department is rejecting me the application. He is issuing a deficiency memo 10 days later. Now I file a fresh refund application. Can the department contend for 21/22, 28/2/24 was the last date, considering the Supreme Court extension given by way of a notification? Now the point is, whether the new refund application filed after removing the deficiencies, what will be the date of filing the application? Is it a time barred application or not? That is a question that will be creeping in your mind. It is like a revised return, I would say, friends. How a revised return goes and steps into the shoes of the original return date. The deficiency memo evidences the fact you have filed an application originally, but there is some defect in it, that's all. You are clearing the defect and resubmitting the form. Moment you resubmit the form, the application is what? Deemed to have been filed on the original date only. It is not what? It is not, the new date will not be taken for limitation consideration. So this is again, it has been held in few High Court decisions. Even in Madras High Court you have one of the judgments. So this is the point. Section 73-74, moving on to this. The first issue what I have taken up for consideration is bunching of the various assessment years while passing an order. An order is passed for, let us say, for 1718 to 1920, one single order containing assessment for 3 years. Now the point is adjudication for 3 years. Now the point is, can an order be passed like that? Can various assessment years be bunched and passed in one single order? The answer is no. Bunching of various assessment year or various financial year is not possible. They have done some research, it seems. They have relied upon one 1965 judgment, State of Jammu Kashmir versus Caltex India Limited. All the assessment encompasses different assessment years. Each assessment year could be easily split up and dissected, and items can be separated and taxed for the different tax periods. So therefore, bunching of assessment year is not possible. Central orders are coming in that way. So you can raise your apprehensions. What could be the second main apprehension you can raise? The very purpose of placing the time limit under 7310 it goes in notice. If you are going to bunch various assessment here into one by way of one single order, you are going to what? Merge various assessment years time limit, you are going to cut shorten it and pass in within the first year's time period. So therefore, this could be the second ground what you can persuade and say bunching of assessment year is not possible. Take one case at 1 year at a time, complete it, then go for the next case. So this is the first point which I want to say. Now let me take some connected issues here. I'll clarify all the issues. Sir, DRC1 is not uploaded on the portal, sir. Common complaint comes, especially central department is not uploaded. Now whether it can be a ground to argue that once one is not uploaded along with the SCN, can the SCN whether this defect is an incurable defect under 162? The question of whether you have to raise this question immediately before even proceeding to discuss on merits. My answer is yes, you have a favorable High Court judgment, Jharkhand High Court judgment in Juhi Industries. Jharkhand High Court in Juhi Industries, it has held that you have to upload SCN along with DRC01. Failing to do it, it is fatal to its validity. SCN is fatal to its validity. However, if you are going to raise these apprehensions, it will antagonize the department. You will be antagonizing the department and matter will go to the next level. But on a personal note, if you ask me whether the Juhi Industries judgment will it hold its field, I would say, I would beg to differ again. Juhi Industries will not hold its field for various good reasons. The language of 142.1, rule 142.1 is clear. It uses the term SCN along with summary of SCN. The word along with implies the action should be simultaneous, not even subsequent to it. So both has to be uploaded at the same time. Now, what could be the counter? Let us think from you are the advocate for the revenue, not only you are the advocate for taxpayer. The counter that will come from department, what way the taxpayer is prejudiced on non-uploading of DRC01 in the portal. Second point, is there any specific, is it treated as a violation? Is it visiting with any of the consequences for failure to upload the same? The answer is no for both the cases. And that when the department has substantively complied with the provisions, they have issued the speaking SCN, although they have not uploaded DRC1, which is a summary of the SCN, they have substantively complied with the provisions, then this small technical violation could be disregarded. There is one obiter dicta of Kerala High Court saying that this could be disregarded in this court's humble view. So this is not a judgment, this is an obiter dicta. Obiter dicta is nothing but a passing reference which is given in the judgment. It is not a ratio decident, it's not a legal principle that is coming out of the judgment. So in Kerala High Court, in one of the judgment, there is a passing reference like this. Now moving on to the next point. Non-payment to suppliers exceeding 180 days. What is the issue? You will find this SCN, you will find this issue common in all the SCNs. Sundry creditors, simply they will take the figures from trial balance. They will take all those numbers from trial balance, maybe due to paucity of time. Here also I think the facts will be similar. And they ask for what? You have not made the payment within 180 days. You are requested to furnish the proof if you have made the payment. There are two issues to be analyzed. One, can an SCN request for a document? That is the first issue I would say. Please understand, SCN is like a charge sheet filed against a criminal. The department is coming up with a heavy allegation that you have not made the payment within 180 days. SCN indicates the commencement of the proceedings. So, the point is simple. After issuing SCN, because the very fundamental what is implied through issuance of the SCN is the department has a material in their hand to allege this particular allegation against you. So when the department says 180 days it has not made the payment, it should have the material with them. How this material can be collected? Through investigation that is inspection under section 67 or audit under section 65, through the various sources they can collect the evidences. After collecting the evidences only they can proceed against you. If a trial, from the trial balance, if they take the simple one number, sundry creditors balance, if they ask, you can simply say that we have made the payment and department has failed to provide the relied upon document to prove or to allege that we have failed to make the payment within 180 days. And SCN is like a charge sheet. It cannot be based on assumptions and presumptions. SCN cannot demand the document. So you can furnish a reply in this way. Next point. The court have come, heavily against the department's action. They have criticized. It is a clear case of non-application of mind. SCN cannot be based on assumptions and presumptions. DRC1 to be uploaded in the portal. And very important, in this case what has happened? There is no DRC1 in this case. While passing the order, what they have written, you have simply stated in the reply, all the payments are made within 180 days. You have not provided any state-specific financial statement. So the taxpayer was appalled. How can I provide a state-specific financial statement? A financial statement can be for the entire company. So it shows the clear non-application of the mind from departments. The court came heavy against them and the matter was remanded back. Now moving on to the next case. Appario Retail Limited versus Deputy Commissioner of Commercial Tax, Karnataka High Court judgment. Interesting issue. DRC1A, they have issued. The presumption, the facts are clear. DRC1A is issued. See what they have done in a haphazard way. 22nd-9 they are issuing DRC1A. These are the real facts. 27-9 the assessee files a reply. 13-9 they are issuing show cause notice with DRC1. Last date for 73 proceedings for 17-18. Within a span of 8 days, all the activities are getting completed. This point is being recorded in the court. Now they have filed the DRC1A. This authority disregards the reply filed in part 2B of DRC1A and proceeds for issue of show cause notice. This is the point which this honorable court has highlighted. The court has quashed that SCN. Not on account of the fact it is issued on the last date, on account of the fact that there is a firm infirmity in commencement of the procedure. They have not evaluated the reply filed in part B of form DRC1A. While bringing this point, you file reply for DRC1A, but in none of the SCNs they consider this, and they either in Kerala they have this practice. How many of you are aware of it? I don't know. In Kerala, if you file a reply to DRC1A, in some of the cases they drop at that level without proceeding for DRC1. But in some other states, including the state of Tamil Nadu, they invariably proceed for DRC1. Then even if they want to drop, they issue DRC5 and they drop it. That is how it happens. But that is not the right procedure. Sir, when you go and ask the proper officer, he will reply, there is no form for me to drop it. I agree. You can drop it by passing a simple order by way of recording it as an office note. Kerala authorities does the same. They record an office note, they drop the proceedings at DRC1A level itself. They don't commence as an SC. So they can do it, but this practice is still not there. Then whatever the reply that you file, the entire pre-show cause notice consultation, this DRC1A is nothing but pre-show cause notice consultation, becomes an empty format. Now, moving to the next point. Can the SCN use the words before getting into this case? I just want to discuss the connected point. Can SCN use the term? It is crystal clear that you have violated the provisions of the Act. You are directed to make the payment. Can it be in this assertive terms? The point is, SCN cannot be in assertive terms. SCN should specify the nature of allegation. And it appears, look at the language of 73. It appears, where it appears to the proper officer is the language. It appears to me that you have violated like this, and you are giving you an opportunity to defend the case. In this tone only, the SCN has to be set. SCN cannot be in assertive tones. You have a classic case of Oryx Fisheries, classic judgments. If you have not read it, I would recommend you all to read the judgment, where beautiful observations have been made by the Honorable Supreme Court. It says, when a person is reading an SCN, a man of reasonable prudence is reading an SCN, he should get an impression that he understands the SCN and replies to it. He should not go and knock his head against the impenetrable wall of prejudged opinion. This is not my words, this is there in the same words are there in the judgment. So the point is, SCN does not commence a fair procedure because it implies that the authority is having a preconceived notion. The word directs or the word what, it is crystal clear. Before even passing an order, it shows, he has made up his mind, and SCN becomes an empty formality there. Next, yes sir. Oryx Fisheries. I'll give you the citation, I'll add and I'll give you the citations now. This case is another interesting case. How important this case, why I brought to the August gathering, is how important to provide the relied upon documents. Here the assessee has done, on reading the facts of the case, it was very clear. The assessee has done some kind of evasion, tax evasion. It is no doubt. But because of the loophole in the procedure, the assessee has made advantage of the loophole in the procedure, and he has find a way to remand back the case to the adjudicating authority. What has happened in this facts? Origin BR Digital Science. See, assessee has done some kind of tax evasion measures. He maintained 2 bank accounts. One bank account was shown in GST, other bank account he was not showing those credits that were coming. The Special Investigation Branch of GST Department found this fact. They are based on this SIB report, the adjudicating authority issues a show cause notice. Now the point is, he has issued, the order is confirmed. The matter reaches the court. The assessee is taking a simple ground that advocates, the representing the assessee is taking a simple ground. The material based on which the SCN was issued was never provided to the taxpayer. Now the department is countering. It is the duty of the taxpayer to ask. He has been silent throughout the proceedings. Now he cannot come and complain, barge upon this defect in the investigation or defect in the adjudication. The court still gives the verdict in favor of the taxpayer. And what could be the reasons? The reason is they are relying upon the principles of natural justice. The principles of natural justice, 2 fundamental pillars are there. One is audit alterum paratum, other one is nemo judex in sua casuo. What are these 2 principles of natural justice? Audit alterum paratum. No man can be no man can be convicted behind his back. That is, without providing an evidence, a man cannot be, he should be given a sufficient opportunity to rebut, to come up with his rebuttals against the allegation, against that material. Failing which, there is a flaw in the adjudication procedure that can be pointed out at any time. This judgment is a testimony for it. So if a relied upon document is not provided, then in such case, it can be pointed out. See, it has been pointed out at the High Court level, and matter has been remanded back. They have bought some time, some additional time has been bought through this. Now, second point, what I told, nemo judex in casuo. This will not apply much to tax proceedings. Why I am saying? What is this nemo judex in casuo? No man can be a judge in his own cause. No man can be a judge in his own case. For example, I say you have looted, it's just an example. I say you have looted 100 rupees. Now I am going to be the judge who is going to decide you have looted 100 rupees or not. So can I decide the case? When the allegation is coming from me, how can I decide the case? So no man can be a judge in his own cause or own case. But this is not being followed in taxation statute widely. unless, as I told, the SCN reflects such kind of, it is glaringly palpable on reading the SCN that the officer has approached the case with such mind, then only the court invokes extraterritorial jurisdiction and quashes the SCN. So this is the point. Next, moving on to section 129. I know it's an headache. This section 129. Spirare Energy Private Limited. See, the periphery of mens rea. What is mens rea? Culpable state of mind. He has done that offence with that particular intention or not. So the point is culpable state of mind, mens rea, is it required? The periphery of mens rea is very wide. You have for judgments, you have against judgment. It has to be completely dealt with carefully. Section 129, so some of the judgments, especially from UP High Courts, 129 does not use the term with an intention to evade tax, nor it uses the term mens rea or anything in it. So the point which came before the High Court, whether this, in this case what has happened, in e-way bill, the consignee's address is mentioned wrongly. And the officer has invoked 129, detained the vehicle, imposed penalty of 200%. Now, is mens rea required? It's just a default or a defect in the documentation. For that, whether 200% penalty can be levied. UP High Court is for the taxpayer. It says, even though the wordings of 129 is not like that, this provision, the rigor of the provision is of such significance that only if there is a mens rea, you can invoke 129 penalty. Having said, but there is one Supreme Court judgment which is, I forgot the name, it is passed by Yama Shah, who says only if the language of the law is such that it uses the term intention to evade tax, then only mens rea is required. Wherever it is not used the term, mens rea is not required. I forgot the name, but this judgment is contradictory to what the Supreme Court has settled. But having said, these are the favorable judgments that have come for the taxpayer, which I want to bring to this dais. And this is a follow-up judgment. They have relied upon 3 judgments already in favor of the taxpayer. Modern Traders versus State of UP, Galaxy Enterprises versus State of again UP, Hindustan Herbal Cosmetics versus State of UP. Section 160 and 161, I want to deal with this both together. When the orders are not signed, my point is not signing an order an incurable defect under 160 or 161. What if the assessee has participated in the proceedings and he has replied to the, let us say, a clarification is issued, registration clarification, nowadays from CPE it is coming, I observe all the orders are unsigned, no name of the officer is mentioned, nothing is there. Now the point is the unsigned orders are invalid, unsigned SCNs, is it invalid? My answer is yes, it is invalid. 160 cannot give the escape route for the department to say the assessee has come forward and participated in the proceedings. It will, that defect is a curable defect and thereby they can escape, no way possible. It is clear, the law is settled, unsigned orders are fatal to its validity and the department, the cases are remanded back to the department for fresh issuance of notice. 161. What is this 161? With this I will complete. 5 more minutes. 161 is about rectification application, the hot topic which is going on. What can be rectified? What can be rectified? Orders, returns can be rectified. You have a wonderful judgment of where I punched the CGST and SGST credit as IGST credit in the return. Now what is the remedy that is there? You have various remedies. Why did you punch like that? My 2A reflected CGST, SGST credit as IGST. As a result, I have also taken as an IGST credit. One possible default is there. Second default. In 2A, it is correctly punched as CGST and SGST. What is reported is correct. But I have made an error. While punching it as IGST credit, instead of punching it as CGST, SGST credit, I punched as an IGST credit while filing the return. Now what is the remedy that is there? All the courts are considered. All the courts are considered. You have 4 judgments from Madras High Court giving a favorable verdict. For these small, mistake in the filing the returns, the taxpayers cannot be penalized. And also further, Punjab and Haryana High Court judgment have come. 7 to 8 follow-up judgments are there in this area, all unanimously coming in favor of the taxpayer. And one more interesting judgment. Why did I bring 161 here? One of the judgment of Madras High Court, it is Kondama Trading. This judgment, what it has held, even the return can be rectified. The return can be rectified under 161. If there is a mistake apparent on record, and this return can be rectified under 161. Having said, the courts are giving favorable relief, you can rectify, but what is the way through which I can, make sure the credit is getting flown in my credit ledger properly? Till now there is no mechanism there. Even though the judgments have come in favor of taxpayer, there is no mechanism available to take that credit. That also I want to mention. Now moving on to the last area, which is 161. What orders can be rectified? Sir, I have filed a reply, sir. The reply is not considered by the tax officer, and he has passed an order without considering the reply. Now I want to file a rectification application. Is it possible? It is a breach of natural justice. Accepted. It is a breach of natural justice. Without considering the reply, you should not pass an order. But is it a fit case for filing a rectification application? On a legal standpoint, it is not a fit case for filing a rectification application, because the language of the law 161 is narrower in its scope. It uses the word error or mistake apparent on record. Yes, is it a mistake? Yes, it is a mistake. Is it apparent on record? The answer is no, it is not apparent on record. Apparent means glaringly palpable or visibly clear. When I peruse the records, there cannot be two views on it. There cannot be two views on it. When I peruse the record, there can be single view. Yes, this error is there. I need not, explain so much to prove that it's a mistake apparent on record. Even a man of reasonable prudence, if he verifies the document, he will agree that that kind of mistakes alone can be rectified under 161. 161 is very narrower in scope. Don't think all the applications can go for 161. Even if you have got a favorable order, I have my personal fear. CAG will open up the case and he will ask for it, because Madras High Court have come up with a recent ruling. Clearly, I think by Justice Mohammed Shafiq has given the ruling. I think not all cases rectification can be filed. That is the the crux of the ruling that has come from even from the Madras High Court. It has clearly stated what is mistake and what is mistake apparent on record. Yes, friends. With this, I would like to conclude my deliberation. If at all you have any question and answers, it is most welcome. Yeah.
There is a case where registration taken in the year 2020, but based on the records in Form 26 AS, where the head office is there in North, somewhere in Gujarat, they passed an order in Chennai.
Okay.
Stating that there is some transactions in 2026 AS you have not shown under GST, so you are passing an order. This guy has taken for this thing at 2020. Now it is an ex parte order. State GST officer passing an ex parte order because the mobile number in this is not there. They could not reply. Whether based on this order, can I request the officer or the state appeals, the next appellate authority, not to at least avoid this 10% pre-deposit?
Wonderful. Yes, sir. See, pre-deposit, since you raise up this issue, I'll also want to cover one more issue, if I am at the liberty to speak. So, first thing is, this is not possible through the appellate authority, sir. Pardon me, because his hands are tied. An appellate authority is nothing but a quasi-judicial authority. He has to act within the four corners of the law. The law is asking for 10% pre-deposit, he will demand 10% pre-deposit. Connected issue. What if I file a condonation petition beyond 30 days? Is it still the authority can condone the delay? Even though the Calcutta High Court has come up with a favorable verdict based on the Limitation Act, I personally beg to differ. The Gujarat High Court has even given the ruling distinguishing the or not following the Calcutta High Court judgment that an appellate authority does not have the power to condone the delay beyond the period mentioned in the statute. So my point is simple. When the Act says an appeal is not your birthright, appeal is a statutory right, and it has all the right to place all these conditions. So therefore, this condition of 10% pre-deposit, if there is a circumstance beyond your ability to pay it, you file a writ before the High Court, say it is impossible for me to pay, the court will give directions. That too, 1 or 2 cases only it has happened. The courts are not inclined to accept that petition. So these are my humble view on this point. Now moving to the next point. Can the pre-deposit can it be paid through credit ledger? That will be the next point. The pre-deposit, in my humble view, yes, it can be paid through credit ledger. I know Flipkart judgment of Patna High Court is against this particular proposal. However, the Supreme Court has stayed the para 77 and 78 of the judgment. So therefore, till date, pre-deposit can be paid through credit ledger as well. But on a practical note, I avoid paying it. I don't want to dodge with the state tax authorities especially. So I recommend for paying cash through cash ledger wherever possible. These are the connected questions which I want to address. Yes, sir.
With regard to this JDA, what you are referring?
Yes.
That the JDA agreement has to be registered. Is there somewhere in the Act whether the JDA?
Nowhere it is stated, sir, that it has to be registered. But in TOPA Act, I think that is Transfer of Property Act, you have the requirement to do it.
As per the Registration Act 2001.
In what context, may I know in what context you are posing this question, sir?
A company having a land entering into a JDA with the associate enterprise, where the JDA agreement, whether it has to be registered for, because in the income tax it doesn't say.
In GST, as far as GST Act is also concerned, it does not say anything.
45(5)(a) for individual, it says yes, it should be registered. To get the benefit under 45(5)(a). 45(5)(a), 45(5)(a) with reference to specified agreement, that is the JDA, for an individual or HUF to get the benefit of deferred capital gains taxation to be paid, yes, it has to be registered. For a private limited company, it is not applicable. In an income tax, it is not applicable. Is that in this thing, in GST under 4/2019 or 3/2019?
4/18, what it says? I think 4/18 or 19, it is issued on 39/19. The notification is only defers the time of supply. Okay. The language is registered taxpayer is there. It does not use the term registered JDA agreements. So even in my humble view, nowhere in that there is a requirement to get it registered. That would be my standpoint.
As far as JDA is concerned, is that the landowner relinquishes 50% or he is giving the land 100%, he takes flat and land?
That is what I say, sir. That is the argument precisely it was placed before the Telangana High Court. So I didn't discuss one more principle that is there. What is a right in an immovable property? People have to understand one thing. There is one test in French term, it is called profit a pin rate. What is that profit a pin rate? Suppose I have a pond, I grew a fish in that pond, I sell that pond, then it is only a right in the immovable property. It should be inextricably attached to that property. TDR is an external right to the land, it is not an internal right or inherent right forming part of the land. So therefore, right in an immovable property has to be construed only in that way, not in what? The external rights are not right in an immovable property to call it as an immovable property. Point number 1. Point number 2. This is the argument it was placed by the taxpayer. Precisely I am trying to sell the land through entering into TDR. That is a very oversimplified argument. It goes through several processes in between. Then you enter into separate conveyance deed for selling the land. So if that so be the case, this argument will not find a merit. In my view, the judgment given by the Telangana High Court will hold its field even in the Supreme Court.
My question is whether the landowner is in a position to give total land, because he gives total land.
Correct.
It is being constructed.
Correct.
And the 50% from it, because in the notification it says that the builder will charge 5% on the construction services.
Correct.
He start charging at 18% works contract.
Correct.
It means that he is taking the land as such, total land, constructs 50% of the building plus land he remits to the landowner.
That is the point. Building plus land he remits to the landowner. Correct. Okay. Yes, sir.
So in this scenario, is that, my question is whether the land is relinquished in toto and he is getting...
That is what I say, sir. See, first thing is, when I enter into a TDR, when I enter into a JDR agreement, I transfer a TDR. What is TDR? I only give him a license to take the possession of that particular place and do the construction. In between, the construction may not fructify, correct? What if the construction may not fructify? The agreement will come up with some clauses. It says that the landowner, the land developer is to be reimbursed the actual cost on submission of the evidences. So, JDA is a separate agreement by itself and it creates a bundle of right by itself. And after, once the TDR is over, once the JDA and the development is complete, then only a separate deed is entered. Second activity comes into picture where sale of land is happening. So there are two activities. One is transfer of developmental right. Second one is sale of land. This cannot be oversimplified to say, or you cannot link every activity, one single activity and view it as a sale of land. So that is my point here, sir. Yes, sir. Anyone? Thank you. Thank you all.